Welcome back on Property Hotline. Today we have Ashish Sodhani with us. Ashish is a tax expert and is going to answer all your questions related to taxes on real estate, taxes that you need to pay when you're buying, selling or investing in real estate. Ashish, welcome to the show.
Thanks, Kavita.
Let's get started. We've got this question that's come in from Samyukta Badrinarayan on email. Now, Samyukta sold residential property in the month of June. Now, she wants to know whether she can purchase a flat and a piece of residential land, that is two properties, to avoid capital gains tax. First of all, Ashish, can you invest in land to set off capital gains?
So that's what my response was going to be. Under the Income Tax Act, the capital gains exemption is available only if you make a purchase of a residential property. And property does not mean a residential piece of land. So therefore, if you want to offset your capital gains of the sale of your house, you need to just make a purchase of the new property, that is a new residential house, new residential home. A piece of land, if you are going to buy from it, does not allow you to take the capital gains exemption.
Right, but I am allowed to set off capital gains on under construction property as well, right?
Absolutely.
So if I do buy a plot of land and use it to build a home, then can I claim capital gains exemption?
So the purchase of the land will per se not allow you to take benefit of the capital gains exemptions, but the construction that you do on that land, you should be allowed to use the capital gains you made from the sale to offset your capital gains tax.
So Samyukta, here's your answer. Of the two properties that you're buying, you can actually claim exemption only on the flat that you plan to buy, not on the plot of land. However, if you intend to build a home on that plot of land, then you can reinvest the capital gains in the construction of that home. But that has to be within a time period, right?
Right. So if you are constructing it, then it should be either 1 year before or 2 years ahead.
2 years after the
sale of the property.
Sale of the property. Right. We have an email query from Mr. Gupta. Now, he's taken a loan of 25 lakh rupees from a bank. Subsequently, the bank enhanced the loan by 6 lakh rupees. It totals an amount of 31 lakh rupees now. He's pledged his present residence for the loan. Subsequently, he had to sell his house for 35 lakh rupees. The bank has reduced 6 lakh rupees from the loan and the remaining has been adjusted with the interest. Now, if he were to sell the house, I'm assuming that this is another house that he's talking about.
Right.
Will it go for capital loan or capital plus interest that totals to 55 lakh rupees? He says the bank has adjusted my residential amount against 6 lakh rupees plus interest. The 25 lakh rupees loan remains as it is. Again, they are demanding 25 lakh rupees plus interest. It's a very complicated question. What do you make of it, Ashish?
Right. So I think there are a lot of facts over here that would be required to actually answer this properly, including the fact that what is the interest rate and what is the amount of interest that the bank is charging. But I presume the 55 lakhs is inclusive of the interest, and therefore if you have used the 35 lakhs to pay the out of the 55 lakhs, if you've paid the 35 lakhs, then you may be required to pay an amount of 20 lakh rupees more to the bank.
So you will have to pay at least 20 lakh rupees more. Net is what you're saying.
Yes, at least from the question is what I understand that.
So what Ashish is also saying is the bank is not really wrong in the demands that it is making. However, we've not got the complete details from you. If you can get back to us with all the details, we can give you a more informed answer. We have Kumar who sent in a question on our website www.mpnow.in. Now he says that he plans to buy commercial property. Does he have to pay VAT and service tax on commercial property? This is a joint venture property with the builder.
So to understand how service tax works, service tax is a tax on the services provided to you. So in a situation when an under construction property is being sold to you, there are certain services that the developer is providing to you, and therefore you will need to pay service tax on that amount. There is a specific calculation provided by the government in relation to under construction property, wherein you don't need to pay the 15% but a lower percentage of the service tax on the under construction property. If you are taking a ready flat, then there is no service tax component on it because there is no services that are being provided to you. VAT is applicable from state to state and it differs from state to state because it's a state levy. Therefore, the amount of VAT that may be applicable to you on the sale of the property would depend on which state are you buying it. There also may be a situation where there is no VAT payable at all.
Ashish, do the amount of taxes that you need to pay, do they change for commercial property? Because that's what Kumar is planning to buy.
Sure. No, the commercial property does not make a difference. The fact that it is a property, immovable property being sold, that is what would only count for.
Right, so you still have to pay around 15% as service tax if you are buying into real estate, if it is immovable property of any sort, which means it would be the same for land, it would be the same for a flat, it would be the same for an office property or a commercial property, which is what you're planning to buy. We have Vasim now, who's called in from Mumbai. Vasim, what's your question?
Hello, good evening to all.
Good evening.
Thank you very much for taking me.
Yes, Vasim, go on.
The question is like, there is a salaried person. Can he claim benefits under Section 24B, that is interest on housing loan, and Section 1013A, that is HRA? These two benefits are mutually exclusive, or can it be taken simultaneously?
Yeah, you want to know whether you can claim both HRA and exemption on your home loan.
That's right.
I can see Ashish smiling over there. Ashish, what do you have to say?
No, so I think it's a very...
Just one point to add.
Yeah.
Sure.
This person has taken this home loan in 50% proportionate. So the rest of the proportionate is, held by somebody else. So can it be considered that I am paying rent to the other 50% holder, although I am occupying the 100% house? 50% I am owner. I am not claiming rent towards that. Remaining 50% I am not the owner.
Okay,
Can I
Vasim.
claim rent towards that?
Vasim, let me get this right. You want to claim HRA and home loan exemption on the same house.
That's right.
Okay, that complicates matters a little bit. Ashish?
Right. So technically, as you said, it does complicate it, because if you are living in the same house, then how can you get an HRA along with an interest exemption? Having said that, considering your situation wherein there is a 50% owner that is with whom you share the property, then in such a situation, if you have a rent agreement with such a person to whom you are paying rent for the 50% of the occupation, to that extent there should be some possibility of you claiming HRA.
But then how does he prove? Say the taxman comes knocking tomorrow, there's a survey.
Right.
How does he prove that, he is paying rent because he's occupying, he has only right to 50% equity in the house?
That's right. So as I said, this could be a very tricky situation, but if we have all documentation in order and the payments have been made regularly to that person to whom he's paying the rent to, then there can be a claim made.
So what is the documentation that he needs to be prepared
So
for?
he needs to be prepared with the rent agreement, and he should be receiving rent receipts regularly from the person whom he is paying the rent to, and of course he should have bank statements evidencing that he has actually made payments to the other person who technically is the 50% owner of the property.
But Ashish, I'm just, we've had questions like this earlier,
Right.
and where people have asked whether they could buy flats in the same building and claim HRA on one and, home loan exemption on the other.
Right.
Now, in cases like this, what are the chances that the IT department will actually be convinced and not pull him up?
So unless we have a very, very strong case, the IT department normally will not let this go off. They will consider the HRA that you have received as income, and you will not be able to get a benefit, rather an exemption from your income, and you will be taxed on the HRA amount that you have received.
So Vasim, you're better off not doing it because it really doesn't make sense. It's going to be very difficult to convince a taxman that you're actually living in a house, paying rent for that house, and also claiming exemption on home loan for the same house. It doesn't matter that you're only a 50% owner of that house, in the sense that you only own 50% of the equity of the house. Convincing the tax department is going to be very, very difficult for you. So it's better off that you do not do this. Instead, what would you advise? What should he claim here? Should he claim HRA? Should he claim the home loan exemption?
So I think the home loan exemption makes sense because you get a 2 lakh straight benefit on the home loan. The HRA may or may not be that high, even if you take it cumulatively for 12 months. I would suggest the interest component makes sense.
So forget the HRA, claim the home loan exemption. We have an email query from Vivek next. He says that many of the residential projects in Noida are delayed. Vivek is saying that builders are not giving possession letters, due to which the buyers are not able to get a tax exemption on the interest paid. What can he do?
So if I understand this right, you are making a payment of the interest to the bank. So as per the Act, once you're making a payment, if you have sufficient documentation, your employer should be able to process the documentation and give you the interest benefit, even though you have not yet occupied the flat, but you have started paying for it.
Okay, so you can actually furnish the bank documents to your employer and you can claim tax exemption, Vivek. I have another question to put to you, Ashish. A lot of people, like you said, you need to offset your capital gains, you need to reinvest the proceeds in a home. And if it is under construction, it has to be ready within 3 years.
That's right.
Right. Now, because we are seeing projects delayed across the country, and it's not just an NCR problem, we're seeing it happen everywhere. What do home buyers do? People who say reinvested their gains in another property, and if it doesn't get ready within 3 years, what do they do?
So the suggestion would be, so there are two options available to the seller in such a situation. One, that they can keep the money in a separate account and then use that money to purchase the property once it is ready. But in this case, the 3-year period still continues to be applicable. However, in case of a purchase of a residential property, you get a 1-year additional, because in case of construction, it is limited to 2 years, while in case of a purchase of a completely constructed property, it is 3 years available to you. The second option is that for the time being, he could also invest it in bonds of companies, of the government, sorry, and utilize that money for the time being, and then once the property is ready, invest it there.
So you're saying that wait for the property to be ready. Buy ready property, do not buy under construction property.
If there is going to be a delay, buying a ready property makes sense because you get an additional year in case of purchase of a...
No, the problem that we are seeing right now is that many people have been promised possession in say 1 year. And for whatever reasons, maybe because approvals have not come in, or the project is stuck for finance, or whatever be the reason, the project gets stuck, construction stops, and it gets inordinately delayed. In such a case where the home buyer has not really anticipated a problem like this, and for no fault of his or her own is stuck in a project like this, what can the buyer do? Forgo the tax exemption.
So no, in such a situation, the case that he should be trying to make is that he paid the amount of money at the time when the property was supposed to go under construction, and he was promised that he will get the property in a period of time. However, there has been a delay, and he should try and make a case with sufficient documentation to tell the tax department when it comes to them that, I did everything right as per the Income Tax Act. The developer has taken the time. The developer is not giving me the property. So therefore, I should be given the tax exemption.
Right. So that's your answer there. If you're stuck in a delayed project, you can still claim your capital gains exemption. Only ensure that you have enough documentation to prove to the tax department that you are in fact in the right, and that you did intend to reinvest all the gains that you made from the sale of the property in this new under construction property. We have an email question coming in from Mr. Mukherjee. He says that one of his relatives got an undivided share of property as a wedding gift from father's uncle's son. Now Mukherjee wants to know whether this is taxable. He also wants to know whether he will get into any problem. So I'm assuming that Mr. Mukherjee has got this property.
Sure.
And is this taxable?
Sure. So under the Income Tax Act, there is a peculiar provision under Section 56 which says income from other sources. Now, getting a property like this would tantamount to being income from other sources. However, when you get property like this, immovable property like this, under in a wedding situation where it has been gifted to you because you got married, then there is a clear exemption available to you, and such immovable property, when gifted to you, should not be taxable to you.
What documentation does he have to show again to prove that it was given as a wedding gift?
A gift deed should be there, and there should be relevant documentation to say that he got married and it is on because of the wedding gift he has received this property.
But under no other, in no other situation is this permissible, as in you can get away with not paying tax on
No, this would be considered to be an income from other sources, and therefore should be taxable only because you've received it on an occasion as a wedding, or if you would have received it as a family gifting to you by a relative, then there could be a situation where it would not be taxable, but otherwise it would be.
Ashish, just to make it clear, who is a relative according to the tax department? When you talk about gifting, obviously here he's talking about father's uncle's son, which is a very, very, it's like a relative who's thrice removed.
Right.
What constitutes a relative according to the tax department?
So, in case of an individual, it would be his parents. The father's ancestrals and the mother's ancestrals would generally mean who the relative is.
Okay, the father's ancestors, that means your grandfather, grandmother on your father's side, your grandfather, grandmother on your mother's side
Right.
are considered your relatives. What about siblings, brothers gifting land to sisters, or sisters gifting
That's also
flats to
covered.
brothers?
That's also covered. Till the first cousin is covered. If you cannot go beyond that, so your father's brother's son giving you a gift should be okay.
Father's brother's son giving you a gift should be okay according to the tax man. That should be good news for you, Mr. Mukherjee. We have an email query now from Romy. Romy is getting a flat registered. Now the builder is charging maintenance, betterment tax charges, miscellaneous and advocate charges. Romy wants to know if all of these charges are applicable and are genuine. Do you need to pay all of these charges separately over and above this, and is it part of the registration?
No, so the registration cost is a standard cost. It's a statutory cost that you need to pay when you are getting your property registered. It is a fixed fee. There is no betterment, miscellaneous or any other charges attached to it. If your developer is taking all of these other charges, they are additional to the statutory charges. Let me also tell you that these other charges are not statutory in nature. Therefore, they can vary from builder to builder. From a very practical perspective, he is taking them from you because he is going to be incurring them. Therefore, you should just be clear and sure as to the amount you are paying, because there shouldn't be a situation where he is trying to make a markup over the cost that he is incurring for registering the property.
Romy, also you said that you're getting the flat registered, so I really don't know how much this is going to help you, but I would suggest that you get that agreement looked at by a lawyer as well, because there are just too many charges that you're talking about, which ideally you should not be paying. So I would recommend in fact that if you have not yet signed the agreement, it is best that you go to a lawyer and get it checked once. We have an email query next from Vijay. Vijay is planning to buy a flat. His investment is 60 to 65 lakh rupees. Now, after buying, Vijay plans to repay the loan from the current flat, which will yield him more than 30 lakh rupees. Now, he wants to know whether there will be any tax implications. He also says that the amount from the current flat is not capital gain. Ashish?
So, I don't understand why he says it's not capital gain. Even if it is a loss, he can still utilize the amount of consideration he receives from the sale of the flat to purchase the new flat. Now, he has already purchased it and he is going to be paying the bank from the sale. So that also should come within the purview of the Income Tax Act, because the money that you received from selling the flat was utilized to purchase the new residential flat. So it should be okay for you to utilize that money and get a capital gains tax exemption.
Now, Ashish, I'm reading between the lines over here, but we've had these questions come in earlier as well. That, you know, so-and-so has inherited property.
Right.
So essentially you got property from your mother, your father, your grandparents or whoever, and which is why they think that if I sell the property, the money is probably should not be construed as capital gains. Is that right? And if I do sell inherited property, how do I calculate capital gains?
Sure. So, in a situation where you receive the property, receiving of inherited property should generally not be taxable. Now, when you make a sale of that property, it should be considered to be a capital gain. You will need to calculate what is the cost of the property today under a specific formula provided by the Income Tax Department, which includes inflation and the value of money as it has gone down over the years. With that formula, once you subtract the consideration, that should be your capital gain.
And if that sounds like too much of calculations, go to a tax consultant. But one thing that you need to remember is that if there is any property that you're selling and if you're making money on it, then there is, whether it's gains or whether it is loss, there is tax that is payable on that, right?
That's right.
We have a question that's come in on Twitter now. KP Thakarshi tweets in, he says, he wants to know how to save tax on a non-agricultural plot which is sold after 10 years. He wants to know whether there will be any tax implications.
So,
he wants, sorry Ashish, he also wants to know, is dastavej compulsory to claim tax benefits?
Right. So, as per the Income Tax Act, again, if you are selling agricultural property and making a purchase of a residential property with that, there should generally not be taxation. Dastavej again is a state to state and a city to city levy. So we will need to look at where and how this is coming from and whether it is applicable.
Right, but this is non-agricultural property. So then he has to reinvest the gains, right?
Right, absolutely.
Right. So if it is non-agricultural property, you have to reinvest. With that, we do come to an end of this episode of Property Hotline. Ashish, thank you very much for coming in, answering all these questions. And we will, of course, help you with answers to all questions related to real estate, whether it's buying, selling and investing, legal issues, home finance, or taxes like those we answered today. Of course, and if you have any questions related to demonetization and its impact on the home that you plan to buy, you can also send in those questions. Call us, write into us, or personally tweet to me. We'll make sure that the country's biggest experts answer all your questions. Thank you very much for watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.